Thank you for joining us, Mr. Soros.
Pleasure.
So, Mr. Soros, so you think what the markets are referring to as the bazooka that the governments need to muster, you think the resources are enough if used properly?
It actually has the bazooka in its hand, provided it uses it in the right way. And the right way is to use it in the form of guarantees, but not guaranteeing the debt of the European countries, because that is too big. It would require probably $2 trillion at least to provide that guarantee, and they don't have that money, and therefore the markets realizing that would not be reassured at all. So this would be a danger of running out of that money and then having no tools. But if they use it right, it would be sufficient.
But that's the current plan right now, is to guarantee the sovereign debt.
No, that they should start first of all by, instead of recapitalizing the banks, they should be guaranteeing the banks against default, the same way as they did in 2008. Because the recapitalization of the banks at 108 billion euros might also not be sufficient to reassure the market. But if they are guaranteed by the EFSF, that is convincing, because for that the EFSF has enough money. Now, in exchange for that guarantee, effectively the banks would have to accept directions from the ECB, the central bank, and the central banks could instruct them not to reduce their balance sheets and not to let credits run out, because having to raise that money, the banks have an incentive to reduce their balance sheets and therefore raising less money. And that creates a credit crunch. And that is part of the financial crisis. They certainly won't be buying government bonds during that period, the next 6 months. And that's why guaranteeing the government bonds wouldn't achieve its purpose either. Right? So you guarantee the banks. The banks maintain their lending. The ECB, or rather the Banking Supervisory Authority, would put in supervisors to make sure that they don't take any undue, don't abuse that privilege and speculate for their own account. And that solves one half of the crisis. And the second step would be after there's been an agreement about Italy, how much they can borrow. In other words, they would have to meet the conditions imposed by the Eurozone. They could then issue treasury bills. The banks would be encouraged to hold their liquidity in the form of treasury bills, and because they could sell those treasury bills to the central bank at any moment. So it's the equivalent of cash, and it would yield more than cash. Therefore, they would hold it. And that would allow the countries like Italy and Spain during this crisis period to borrow at negligible cost, less than 1%, let's say, because the ECB would lower its interest rates even further. So that would make Italy again sustainable. Sustainable because the ECB has any amount of money for the purpose of providing liquidity, and at the same time it would not violate the law against the ECB directly financing the governments. It's a trick, but it's a trick that would work. To guarantee the banks, the banks maintain their lending. The additional step would be for the EFSF, this newly created treasury, effectively, either taking over or guaranteeing the Greek bonds held by the central bank against a loss of value. And that would enable the authorities to offer Greece a reorganization of the officially held debt as well as the privately held debt. At the moment, you have a voluntary offer of a 50% haircut from the private sector. That's $206 billion. But the bonds held by the central bank, by the IMF, by the authorities is not included. This would offer Greece an avenue, if it meets the targets and reaches, let's say, a primary surplus, that the official debt would also be exchanged. And it could be exchanged into zero coupon bonds maturing after 10 years in equal installments. So Greece would have a vision of getting out of the crisis without a default. And the money that has fled Greece would come back, and the economy would restart, and the publicly held assets could be sold to the private sector, and the whole program would actually work.